Hi, today we'll be talking about a petty cash fund. A petty cash fund is a small amount of cash that a business keeps in order to reimburse and pay employees for small business expenditures. These expenditures include office supplies, postage, and transport, and thus create better management of cash outflows. There are 3 steps involved with a petty cash fund. Number 1, establishing the fund. Number 2, making payments from the fund. And number 3, replenishing the fund. To establish the fund, a cash check is written for a specific amount that the business believes it will use. This is then given to a custodian who is a designated employee that safeguards it as an important internal control method, as it is only accessible to them. A journal entry is then made to establish the fund, whereby petty cash is debited and cash is credited, meaning that there are no changes to the company's assets. However, the fund has now been created. When cash is used, a receipt must be kept as a proof of purchase and held by the custodian. This is an imperative internal control method by maintaining adequate documentation. All disbursements from the fund are recorded by the custodian with the person, time, amount, and reason for the use of cash in order to protect against fraud. Once the fund is empty, the balance must be replenished. This is done by comparing how much has been used versus how much is needed in order to replenish the fund to its initial cash balance. The receipts that were collected previously must be used to document all expenses from the fund in order to balance the account to its original petty cash amount. However, as seen, if it does not balance, a temporary expense account named cash over and short is established in order to identify the amount of cash that is either over or short from the initial amount and can have either a credit or debit balance. The purpose of this temporary account is to analyze why there is a difference, either over or under the original amount. The custodian must also review all receipts and look for any possible fraud. However, as shown, the amount that is over and short is usually quite small, and therefore is simply recorded as an expense and added in order to balance the account and fully replenish the fund. Thus, a petty cash fund allows for more flexibility for cash flow management and establishes clear internal control methods, being physical security and maintaining adequate documentation. Thank you very much for watching this screencast.